Well, joining us now is U.S. Chamber of Commerce Chief Policy Officer Neil Bradley. The chamber out with a new poll about the potential strike, saying a majority of Americans want the government to step in and stop it, and just sent a letter to President Biden urging him to intervene. Neil, it's great to have you on. I've seen numbers as high from J.P. Morgan as $5 billion a day in economic impact. But we also know that a lot of the shipping companies, a lot of the shippers who have their goods on those ships that would normally be coming into East and Gulf Coast ports have been diverting them and making other plans. So at what point could this truly become harmful and detrimental to the economy and start impacting consumers and businesses?
Well, Morgan, thanks for having me on. If we have a strike at 12:01 tonight, which it does look like that's where we're heading, within hours, you will start to see some of the ripple effects. So if you have just a one-day strike, for example, that creates a backlog within these affected ports that takes, on average, 6 days to clear. If this strike goes on for 2 days, you're talking about 2 weeks just to clear up the mess that's been created. So it's not hard to imagine a situation where even a strike that only lasted 1 week actually disrupts the economy well into November. And if you're a small business who's counting on goods coming in over the next 2 weeks, for example, for your holiday sales season, you may miss out on the entire season if this strike actually occurs.
Now, we just mentioned that you sent a letter to President Biden. I mean, he has the power as the president to potentially invoke the 1947 Taft-Hartley Act. That gives the federal government authority to step in labor disputes. But he's also been pretty vocal in saying he's not going to do that. So what is your message to him today, and why do you think you can change his mind if it does involve invoking that act?
Well, taking the invocation of Taft-Hartley off the table is just a mistake. This is not like it's a new idea. As you pointed out, it's been in the law since 1947. And on 37 different occasions, President Biden's predecessors have used this act to ensure that striking workers can't bring our economy to a complete halt. And so our message to the president is that this is much bigger than one union and these ports. This is really a question for our entire economy. He has the responsibility and the authority to use the powers under the law to protect our economy. And by the way, it happens to be what the American people want. We just released a poll today. 57% of Americans say the president should use this authority to protect our economy and keep the ports open and operating.
Neil, how many days do you think before this becomes a sort of red line event for the economy? How many days of striking?
Yeah, as I mentioned earlier, John, it really only takes 1 day of strike to have these type of ripple effects.
But how bad is that is what I'm asking. Sure, you have the ripple effects. Sure. You end up potentially with companies pursuing air freight instead, which costs a lot more, and I imagine those costs get passed along to the consumer, affecting inflation. But how many days, if you've calculated that, before it becomes a really serious problem?
Yeah, I think it's just a few days because, as you point out, this is a compounding effect. Look right now, look at spot shipping prices. Look at what's happened over the last few weeks as importers and exporters have tried to get ahead of this strike. They've actually driven up the cost of shipping goods into and out of the United States just by the threat of a strike. And so if we actually cross the threshold, if we actually end up in a strike, I think that is going to send shockwaves through the economy. Remember, we haven't had a strike on our East and Gulf Coast ports since 1977. That strike lasted for 44 days. It is a much bigger, much more trade-reliant economy today. If we even come close to that, you're talking about economic devastation for the United States.
I mean, we've seen labor take a much more aggressive approach and have the leverage to do it in recent years because it's been a tight labor market. And obviously, we've got Boeing and its striking machinists right now and reports that those talks have broken down as well. You've got the possibility that UAW workers at Stellantis factories are actually going to start going on strike as well for what they see as violations to their labor agreement. It all raises the question, is this labor's last stand if we do have a cooling job market, or does this unrest continue?
Yeah, I think we've entered a situation in which the demands that are being put forward by many labor leaders just are out of touch with kind of economic reality. Even in this situation, the port operators want to provide a big raise to workers, but the 77% raise that the union is demanding, There's just no way that the economics can accommodate that. By the way, all of us who buy things would end up paying that price. And so I think we have a situation today where you're right, the unions are feeling more emboldened, the union leadership, but their tactics have real collateral damage, from small businesses who can't get goods in to think about the restaurants around some of these factories that have been shuttered by recent strikes. There's no strike fund for the restaurant owner who loses all their business. There's no strike fund for the manufacturer who sells goods into these manufacturing plants. And so we're starting to see that this aggressive posture by labor leaders is really beginning to drag on our economy.